The world economy is connected now more than any other time in history, but that economy is still trying to find a new normal after some of the crazy events that have occurred in the past few years. The invasion of Ukraine has brought new concerns to the world, and it also brought extreme volatility to the financial markets. The US and other exchanges were hit hard, and some indexes like the Russell and Nasdaq have now gone into bear market, falling more than 25% from their all-time highs. We have volatile markets. Gas prices in some states were recently approaching or over $5 a gallon, and inflation numbers in the US are at a 40-year high of 7.9%. This has people looking for safe spots to put their money like gold or just hoarding it under their mattress, but there's actually a guaranteed way to make over 7% return on your investment in 2022. Most people, when they think of investing, think about the stock market, which could be individual stocks, ETFs, or mutual funds, or they think about buying something like real estate. You can also buy commodities such as gold or cryptocurrencies like Bitcoin and Ethereum, but another item you can also invest in is bonds. Normally, bonds have very low interest rates that tend to be close to CDs. However, the US government I-bonds are currently paying 7.12%. These bonds are issued by the US Treasury through treasurydirect.gov and use a composite rate to calculate the interest they pay out. This rate is determined by a fixed rate, which has been 0% since 2020, and also an inflation rate that changes every 6 months in May and November. With the inflation that we currently have, the inflation rate that gets determined in May should be the same, if not higher, than 3.56%, which was determined last November, and that will continue the guaranteed rate of return of at least 7.12%. There are a few pros and cons of I-bonds, and one of the first cons is that they need to be held for at least 1 year. You are also limited to only purchasing $10,000 of I-bonds every year, and if you cash out the bond earlier than 5 years, you will lose the last 3 months of interest. One of the big pros of I-bonds outside of the guaranteed interest rate is that they're also exempt from state and municipal taxes, which is not a benefit that you'll find in other investments like stocks or cryptocurrencies. Now that you learned a bit more about I-bonds, what are your thoughts about them? Are you going to buy I-bonds to try and keep your money up with the rate of inflation, or are you investing your money elsewhere? If you like the format of this video and would like to see future videos when they're posted, please consider subscribing to the channel and click the bell icon if you'd like to be notified. Thank you for watching until the end, and please continue being smart with your money.